Hello friends, welcome back. Today we'll go for discussing about the concept of trading account. So in the last video we have seen the introduction to the final accounts. That is, we have discussed about the what are the various types of final accounts and why we'll go for preparing the final accounts. What are the different statements we will consider as the final accounts. All those things we have discussed in the last video. So now in this we'll go for discussing about the first type of statement which is prepared as a final account. So that is trading account. So trading account is an account which is prepared as a statement by the business organization, and it is one of the statement which is present under the final accounts. Already in the last video I have explained about the trading account. So trading account is nothing but it is the overall result of trading activity. So trading activity is nothing but buying and selling of goods and services. We will call it as a trading activity. So trading account gives the overall result of trading activity. So it is whatever the purchases we are having and whatever the sales we are making. So the result of purchases and sales, selling. So the trading activity results will be known from the trading account. So the reason for preparing trading account is to know what is the exact result from the trading activity, whether we are getting the gross profit or gross loss from the particular trading activity. To know that, we'll go for preparing the trading activity. So trading account. So trading account is the result of trading activity. So here under trading account, as we already discussed, so we will be having debit side as well as the credit side of the trading account. So you can see the format or pro forma of the trading account. Trading account of Mr. Person as on the date will be written here. We will be having debit side as well as the credit side. On debit side, we will go for recording all the expenses related to the trading activity. And on the credit side, we will go for recording the incomes related to the trading activity. So if you are incurring any expenses related to trading activity, then all those expenses will be recorded under the debit side of the trading account. And whatever the revenue or income you are getting from the trading activity, that will be recorded on the credit side of the trading activity. So like that we will prepare the trading account. And always while preparing the trading account, the first item to be preparing the trading account. On debit side, always the first item to be recorded is the opening stock. You have to write the opening stock first on the debit side of the trading account. So opening stock is nothing but the stock which is remained unsold at the beginning of the financial year. So that will be considered as an opening stock. So the first and foremost thing to be recorded on a trading account is opening stock which is present at the beginning of the financial year. On debit side, that should be recorded. Once the opening stock has been recorded, then you have to go for recording the amount of purchases. So that is whatever the purchases you are making in the particular financial year, like raw materials or any other requirements, whatever you are having. So if you are purchasing anything, so all those purchases amount will be recorded on the debit side. And from that purchases, you have to go for deducting the purchase returns. Sometimes if you are having damages in the purchased goods, or if you are not required so many goods, then you will go for having the returning of goods which are purchased from the suppliers. So record the purchases, and if you have any purchase returns, then deduct that purchase returns amount from the total of purchases, and then take the amount, total amount on the outer column of the trading account. So first opening stock, next purchases should be returned, and from that purchases the return should be deducted. So and after recording opening stock and purchases, then you will go for recording all the direct expenses. Whatever the expenses which are related to trading activity, all the direct expenses will be recorded under the debit side of the trading account. So this is the debit side. And now on credit side, anywhere, so in preparation of the trading account, only will be having two items, that is you will write sales and the closing stock. So in the trading account, credit side, we will be having only sales amount as well as the closing stock amount, because on this credit side we will record the incomes. So from the trading activity, what is the income we will get? That is, whatever the products we will sell, from those products, whatever the revenue we generate, that will go for recording. So that is by sales amount. So by selling whatever the amount you are getting, so that amount will be recorded. And if you are having any sales returns, that is whatever the products you have sold to the customers, if any customer has returned your products due to some problems or due to something, so then that return should be deducted from the total sales amount. That is by sales minus sales returns, and the total amount will be taken in the outer column. Next, by closing stock. So closing stock is nothing but the stock which is remained unsold at the end of the financial year. That will be called as the closing stock. So these are the items which should be considered in the preparation of the trading account. Now, as I told in the last class, the final outcome of trading account is whether we are having gross profit or gross loss. We have to know what is the gross profit or gross loss. How we will come to know that? Means if the total of debit side is more and the total of credit side is less. That means if the total of credit side is less and total of debit side is more, then it indicates for the by gross loss. So means if the debit side amount is more and the credit side amount is less, then whatever the shortage amount we are having on credit side, that will be written as the gross loss amount and will go for making the balance of the credit side. In the opposite situation, if the credit side amount is more and the debit side amount is less, then we will go for having the writing of the gross profit. That is, whatever the shortage of amount we are having, that should be written as the gross profit, and we will go for having the making of total on both the sides. So if debit side amount is more and the credit side amount is less, we are having shortage on credit side, then we will write it as the gross loss. If the credit side amount is more and the debit side amount is less, then the difference will be written as the gross profit. So this is the final outcome of the trading account. We will come to know what is the gross profit or gross loss of the particular trading activity. And now here we are saying we have to go for recording all the direct expenses in the debit side of trading account. So what do you mean by direct expenses, and what are the items to be considered under the direct expenses? Let us discuss that. In the format of trading account. In trading account, on the debit side we are recording purchases, opening stock and direct expenses. So what do you mean by direct expenses? So direct expenses is nothing but the expenses which are incurred for purchasing the required goods and bringing them to the business premises and making them fit for the sale. So that is called the expenses incurred for this process. We will call it as the direct expenses. That means to purchase whatever the raw materials or whatever the goods you required for production process, purchase of that expenses incurred for purchasing of goods. So whatever the goods you are purchasing, bringing those goods to the business premises. Once the goods has been received by the business premises, then you will go for making the goods to fit for the sales. That means you will go for having the finished goods. For all these processes, whatever the expenses you are incurring, so all those expenses will be called as the direct expenses. And what are the expenses include under the direct expenses, or what are the items we will consider as the direct expenses? Means local taxes. So to transport, that is goods purchased from supplier place to your business premises, the goods to be transported. So if you are paying any local taxes, or if you are importing the materials from other countries or importing from other states or other countries, then you have to go for payment of the import duty. And wages, so labor should be required for importing and transporting the materials to the business premises. So wages to be paid. Coal and gas, power, manufacturing expenses and carriage. So all these are the items which should be considered as an direct expenses. I mean, these are the expenses which are incurred in purchasing of goods required for the production and transporting materials from supplier's place to the business premises and making those goods fit for the sale. So to complete this process, we will go for incurring these expenses. So they are called as the direct expenses. The expenses which are incurred for the from purchasing to selling, whatever the expenses we will incur, they are called as the direct expenses. So still now we have seen the format of trading account, that is that tabular format in which we can go for preparing the trading account and we can find out the gross profit. So there is another method for finding out the gross profit, that is by using the equation, by using the formula we can go for identifying the gross profit, that is equation for trading account. The final outcome of trading account is gross profit itself. So gross profit, not only with the tabular format, by using this equation also we can have the finding out the gross profit, that is gross profit is equals to sales minus cost of goods sold. Sales means whatever the amount you are gaining from the selling of your final product. Sales amount minus cost of goods sold. So cost of goods sold means to sell the goods, what is the cost you are incurring? So the formula for cost of goods sold is first opening stock plus purchases plus other direct expenses minus closing stock. This will give you the what is the cost of goods sold. That means opening stock, the stock which is remain unsold at the beginning of the year, plus whatever the purchases you are having, add that purchases to opening stock. For this total amount, add all the direct expenses. From this total amount, if you deduct the closing stock, that will give you the value of cost of goods sold. So this is all about the trading account. The first type of statement which is prepared under the final account. Hope it is clear for everyone related to the trading account. So in the next video we will go for seeing how to prepare the trading account with the given information. Thank you.